JB here. Hope everyone's doing outstanding. August 5th, 9 a.m. on this fine Tuesday morning. Talk really quick about the market. Some names I'm looking at go from there. S&P futures in the green off the highs of the morning session so far. Looking to put back-to-back sessions of green together after Friday's massive sell. I wouldn't even call it a massive sell, but obviously one of the larger pulls we've had in a couple weeks. It's funny, I was saying it yesterday afternoon on the rant. It was like uh, they were trying to, the headlines were trying to explain the rally, and it's like, oh, traders are pricing in a higher probability of rate cuts come September. And also the other headline was that the EU was going to put a pause on the possibility of retaliatory tariffs on the US for at least 6 months. To me, it's like, what has changed from Friday to Monday? I mean, the data was already out there Friday morning, right? So uh, to say that all of a sudden on Monday the market decided it was pricing at a higher probability of rate cuts, I mean, it should have done that on Friday, and some of it was, I thought. But to me, it was just Friday seemed like profit taking panic. Some folks using that panic to kind of maybe induce selling, and then you have the folks coming out of the woodworks. Oh my gosh, this is it. This is a sign the recession's we're in. The recession's coming. The slowdown in the economy's coming, and more inflation's coming. And then it's like back to normal today, yesterday and today. So, I was making the argument yesterday. I mean, we all know about those benchmark reviews that they do on the jobs report. Well, not everybody knows, but it was something that they do every year, but it came into focus last year, last August, when you had that huge 800 plus thousand, 100,000 downward revision. Uh, and then, here it is again. It's all this data is coming up into question, right? And nice little, I think there was an article in the Wall Street Journal explaining how the process goes in regards, to surveys, and how, the reason there is backward revisions because some of the data doesn't come in right away, and they try to have the most accurate data. I saw somewhere else, like if the Bureau of Labor Statistics, just one division, if it was an IPO, it would be like a $10 billion entity. But anyway, needless to say, we're probably at some point the jobs report is going to be in the review mirror, and there'll be some kind of other data point or catalyst that folks will be talking about, right? I mean, I was thinking about this morning, overnight you always see the headlines in regards to what's going on in Japan, but the Japan yen carry trade that picked up steam last summer, right? And we had that big sell off, and then it looked like it was picking up steam again a couple months ago, and now that story's not not around anymore. So there's always like the next wall of worry, right? The credit rating downgrade for the U.S. I mean, it's just one thing after another. But at some point, typically when there's no negative catalyst, that's when the market's going to find some pressure. But needless to say, nice little chart here. I posted this in the watch list this morning. Ryan Dietrich retweeted this morning. AI spending contributes more to the GDP growth than consumer consumption. So, just impressive stuff. I mean, who knows how long that ends, right? I mean, it's you can only spend so much, I guess. I mean, obviously there's demand, and then there's supply issues, especially in regards to the energy space. So who knows if that continues? But you can make the argument now that even if the consumer does slow down and there's weakness there, the capex spent from these Mag 7 names and other names could just keep the GDP growth going, right? And not only that, you have some of these foreign companies building in the US. Like, what does that look like for the GDP growth? So I think there's other factors that people just look at consumer consumption. Another piece, I think it was in the Wall Street Journal this morning, talking about like stories about all these folks who are struggling, and there's always struggle, right? So it's easier to point the spotlight on those when you're trying to paint a picture of how bad tariffs are for everybody, right? So maybe they will be. I take everything with a grain of salt, but for now it's like every time there's a little hint of weakness, that story comes out again, and then once the strong numbers come out, it's like, oh, eventually they'll show up, and maybe they'll. All right, enough on that. Just so let's go quick on the overall market. 636 to 618 on a SPY. 630, I think it's 630.06 or so. That'd be a spot. Maybe I'd be open to get a put hedge today. And then 626. I'm not saying I don't have my bear suit on, but I'm still somewhat more cautious than I've been over the last week or so. Not for any other reasons, just I think there's an opportunity, and I think last week the Bears kind of sensed, hey, okay, we smell some blood. Maybe maybe there's not going to be another opportunity. We did have this headlines this morning at POTUS on CNBC, and he pretty much said threatened the EU again if they do any back steps on their deal. Tariffs going to go back up to 35%. Then talked about India saying, hey, if they're going to send more oil to Russia, we're going to keep hiking the tariffs up on India. hopefully that all gets resolved. We have August 7th is that drop dead date, so you still have the Swiss, Canada, right? Those things need to get resolved. And I think if they do, maybe that can kind of keep markets well bid. But we're similarly like we've had like 2 or 3 weeks ago, we're kind of in a news vacuum outside of the earnings. So after the close yesterday, you had Hims, Plantier. I put on the watch list this morning, like Plantier. I remember when it was a $30 stock and it traded like 100 times revenues. Now they're forecasting to do like $4 billion for the year. And if it keeps it up at the open or a little after open, it might be a $400 billion company doing $4 billion in revenues. That you can't look at just one metric, right? Because if you just look at that revenue valuation, the revenue per sales number, it probably would get most people. It got me away, it kept me away, and even that, the growth, 38% or so. So, uh, more to the story. Maybe it's the capex spend. It's the defense side of the business too that really helps them. But uh, after the close today's big ones, right? AMD, I don't know how much it'll move markets, but I mean that one's been on a massive run. It could go into the 200s, right? I always used to talk about AMD as being like the baby Nvidia, right? Or the stepchild. And of course, I missed the run from 110 on. I stopped trading it, but could be a nice one. Hopefully, that can at least report some decent numbers, and that can continue to go. Um, and then the good news yesterday was small caps up 2%. But we know how this small cap story goes. Every time it seems like it's going to take off, it's had some rallies in early July, then mid July, and it seems like 1-2 days, and then it's back to selling. So hopefully that changes. All right, that's overall markets. Now, quick Joby. What else can I say? More news this morning. Announced a partnership with a Japan Airlines. It's like a $10 billion airline valuation. Does like I don't know, $2 billion in revenues, but just talks of a partnership, being able to scale out to air taxis, the Joby side. So just another addressable market that they're opening, right? And this is on the heels of their Blade acquisition yesterday, and then that defense agreement, defense company partnership last week. They have earnings tomorrow. So I don't know what else they can say that's really going to spark the shares higher. Hopefully it's enough so the sell the news crowd doesn't come in. But just impressive stuff. I mean, the Joby news yesterday was hitting the New York news, the major news outlets. Pretty remarkable stuff, right? Because Blade's one of those names that operates. It's just interesting. So, I was saying on Rand yesterday afternoon, I was on the fence of locking some more. I only have a couple left of those October 20s. I locked some more in yesterday for over 400%. I was thinking just lock one or two more and then roll out to some October 30s because the risk reward, right? So if it continues to rally into the 30s, the 20s, those premiums aren't gonna, you're not gonna get the 10, 20 bags from here, right? So there's risk though. The risk is that if it does sell off, those 20 calls are going to deteriorate in premium quickly. So me to control the risk, and Joby's been quite the profit maker so far. I'm thinking if there's more upside, there'll be more reward if I can lock a few more of the 20s in, roll them into 30s, and I'll have more contracts on the 30s, right? So that's kind of the thought process. I don't know if I'll do it at the open. It's sitting here at 21.33. So I definitely something in my mind. So don't be surprised if I do that today. But just gosh, I mean, is it going to go to $30? Is it going to go to 40? We've seen crazier things, and I was talking about people missing Uber, missing Lyft, missing some of these companies that you're like, wow, there's no way this is going to exist as probably, it's not going to exist not only as a concept, but actually generate revenues and scale and all that. And now it's like it almost looks like the path is unstoppable to that happening. It's just how big it's going to get. So, and then, Joby, it could be like Boeing, right? Boeing, one little mishap, especially in an airline or a disaster like that in public transportation. I mean, that's crazy, not good for the stock. So there's so much risk, but I think that's why there's like a risk premium, right? And there has been for a while. And I think that risk premium is getting mitigated, and that's why the stock's starting out. All right, so that's Joby. I don't know why I don't have SERV here. I added some more SERV strikes yesterday with the premise of closing them out. Some or all before Thursday earnings. We'll see. Hopefully, you look at Joby, and Joby has a lot of risk, and so does SERV, right? And SERV is a niche, right? And people who thinks that robots can be able to transport good products to consumers, it just doesn't. It's still early in folks thinking that that's possible. Same with driverless cars, right? People still can't picture a world where there's no one at the steering wheel. It's just who knows if that ever happened. I mean, it's going to happen. That's just my thoughts. But other people think they'll never get in a car that doesn't have someone driving it. And same with who would think that a robot's going to deliver your food. It just doesn't, 5 years ago, you wouldn't think that's possible. Now it is possible. And now it's scaling out. So it's like, how does this company go from scaling out to being profitable, you know, opening markets, things like that. So I think they're early innings of a huge growth phase. Obviously, I mean, going from $1 to $2 million in revenues per quarter to possibly 60 to 90 million next year, with 15 million a quarter or even more than that. So my thought process on my rationale on SERV. I'm not going to add any more strikes here. Earnings could be a binary event. I mean, they could have some kind of missteps or pull back some of their timelines. And of course, that'd probably hurt the stock. So don't want to be overly aggressive, but at the same token, I don't want to miss the boat either. All right, so that's SERV. Reddit disappointed to miss the open yesterday. It's actually lower here in the pre-market for a couple bucks. I think it heads up to all-time high. So I don't know if I'm going to get the August 15 strikes or if I'm going to try and get October calls, but you have to, I think it's headed 240 plus. Just my thought there. I was mentioning yesterday afternoon, it's like Reddit's one of the few AI spaces or plays that has the human element, right? And more so than any other place. So I really love the edit setup. What do I have here? Sorry about that, folks. Oh, Lemonade reported earnings this morning. I was looking, I kept talking about getting into earnings. And then, I kind of looked at I think it's a 15% implied move, $5 and change. Stock was at 37 bucks. Great earnings this morning, raised their revenue guidance a little bit. Stock's up $3 here in the pre-market. I'll be watching. So if it can hold gains in the morning, I might look to place some calls for a squeeze over 50 bucks. But it's same token, that one's been a tough one to trade over the last couple of months. So I might just sit on my hands there. So the premiums will probably come out somewhat of the calls this morning, even with the gap higher. So there could be some opportunities. So that's Lemonade. Also Align, right? So, Align, I was looking for premium build on calls last Wednesday for earnings, not for a bull or bear play, just because it tends to have premiums creep into the calls, just like it happened with Roku last Thursday at the end of the day. So you can get some out of the money strikes that are 20, 30 cents. By the end of the day, they're like 60, 70, only because the implied move has increased based on call volume, put volume, what have you. But here's one of my favorite names back in the day. It's so fundamentally sound. It reminds me, I wouldn't call it Intuitive Surgical because Intuitive Surgical is like a massive cash cow now. I don't know how much Intuitive Surgical has in cash now, $7 billion, no debt. But Align Technologies, $900 million, no debt. They've been actively buying back stock for over a decade now, and they just announced plans to do I wouldn't call it an accelerated stock buyback program, but they're going to do an open market order for $200 million. They already have an authorized buyback. I don't know the exact figure. I just took a quick glance. But even without that, you look at the earnings, and I'm like, the earnings weren't that bad. And maybe, I think it trades north of 150 in the coming weeks, so I might probably higher. So don't be surprised I add some spec calls here if it holds its ground in the morning. It's closed at 137, gapping a little bit here on that buyback news. That's that. Oh, and then some other names. Still looking at MDB. Surprised it didn't rally much yesterday with the market, considering its pullback from that Amazon earnings. So I'll be watching that one. VKTX was all the way up near 35.75 overnight. Down here at 33.95. At some point, I was saying yesterday afternoon, the earnings keep coming out of weekly strikes every Monday, right? So people hyping up into Friday, hoping they get the lotto ticket that they're going to announce their oral data, and then they don't, and then the premiums get destroyed on Monday, and it's like rinse and repeat. Hopefully that rinse and repeat doesn't happen for the next couple of weeks. Hopefully they announce data before August 15th. And that's it, folks. I'll be back on audio later. Let's have a great day. We're rock and roll.